Hey guys, Brian here. Hope your week's going great. The banks are full of bad loans on commercial property. Don't take it from me. That's the assessment of Charlie Munger at Berkshire. We happen to agree, completely agree. And in this video, we'll take a look at this chart, which should give us some insight into how bad things could get. All right, welcome back. I was in Taipei a few weeks ago. I had to go visit Taipei 101. This was the world's tallest tower until 2009 when they finished the Burj in Dubai. I've visited several of the world's biggest towers, and most of them, I have to say, are well worth it. Taipei 101, it's only about $20 US to get in. We went on a Tuesday around 5, not too crowded. Lines moved quick. It's organized really well. We really enjoyed it. And most important, it gives me a nice segue to talk about commercial real estate. I haven't been to mainland China yet, but when I was in Taipei, there's a property consultancy called Colliers. They had just announced that trading volume in Taipei office buildings is off 87% from a year ago. So first thing we should point out, this is not just a US problem. This isn't even just a problem in Asia. It's a problem everywhere. I was going through the Bloomberg terminal last month looking at individual bonds at some of Europe's big property developers. Some of these bonds are off 50, 60, 70% already. I put together this chart, but I honestly could have filled a couple pages with charts that look exactly like these. Bottom line, commercial real estate is a mess, and it's not going to get cleaned up anytime soon. It is definitely bearing down on the US right now. This is a chart that Steve and Pete published last month. It's the Green Street Commercial Property Price Index. So this captures unleveraged commercial real estate values in the US. Year over year, we're falling at about 15% now. But the more important part of this chart is actually back here in 2010. What this shows is that really price pressure has been mounting for a decade. All that happened during the pandemic, some steam got let off when the government handed out stimulus checks, but that's over. And the CRE crisis just kind of picked up where it left off. And yes, banks are holding a lot of the debt that is backed by these properties. Our view is that the bank trouble to date is really just a warm-up. If you want to follow our views on this in real time, the links below will take you to our resources. Thanks for watching.